Welcome back. So we learned a little bit about money. We learned what money truly is. We learned how the government makes their money through tax revenue. Now we're going to talk about who controls the money. The money in the United States of America is controlled by the U.S. Federal Reserve, and they reside in Washington, D.C. They have all authority over all of the banks, both big and small, in America. They set both fiscal and monetary policy, which means they control exactly how that money moves. They control the circulation of money in our economy through the banking system. Know that the U.S. Federal Reserve is a separate entity, the United States government. They're not the same. Do they work together? Absolutely, but it's two different entities. The Federal Reserve is also responsible for setting interest rates. Because the Federal Reserve set interest rates, this means that they have the authority to move our country in and out of a recession. You ever thought about that? You might be asking yourself, wait a minute, how are they able to do that? Super easy. If they want people to start spending more money on frivolous things like cars, entertainment, vacation, travel, all of the stuff that we just love to do in life because we love doing other stuff than working, right? All they have to do is reduce the interest rates. So if I'm looking to invest in anything and interest rates are low, what does that mean? It's less expensive for me to borrow. Because it's less expensive for me to borrow, what am I going to do? I'm going to hop on that investment. I'm going to hop on that house. I'm going to hop on that new business, right? I'm going to hop on a partnership with someone for us to make more money because it's less expensive for us to do business right now. So lowering the interest rates open up the economy. It's like a free-for-all. So everyone is going. But what if they want to slow the economy down because of inflation? What will they do then? You got it. They'll increase the interest rates. Increase the interest rates will stop us from doing certain things. I'm not buying that car. The interest rates are way too high for me to buy that car. I can't purchase that house. That's way too expensive for me to purchase that house. I can't take out that loan, probably can't go to school. I can't do certain things in life because I don't have a savings to do it. And I can't borrow because the interest is too high. So they have the ability to control the economy. They're controlling the momentum. So remember, if interest rates are high, it's more expensive to borrow. If interest rates are low, it's less expensive to borrow, thus controlling the momentum. Now, there's 4 different types of interest rates. I'm not going to bore you with the facts because at the end of the day, you're here to learn what you need to do. But know that there's 4 different interest rates. There's an interest rate when banks borrow directly from the Federal Reserve. That's the lowest interest. Well, not the lowest. It's the second lowest interest rate. The lowest interest rate is when banks borrow from each other to keep the circulation of the economy flowing. The third lowest interest rate is when banks borrow to their most trustworthy customers, the Nikes, the Googles, the Amazons, right? They got all the money in the world. They're going to pay their bills because they're making a ton of money. Those are the most trustworthy customers, that the banks have. Then there's us, the bottom of the totem pole. We're not the preferred people to lend to, but we need help, right? So the personal lending rate is the rate that we get, and it's the highest interest rate. So when we borrow, what is our interest rate based on? That's correct. Your interest is based on your credit score. So know that we already have the highest interest rate going into the game, right? So even if I have an 800 credit score, my interest rate is still higher than everyone else. So I'm already silver lining their pockets and paying their bills. But what if your credit is bad? That's just icing on the cake for them. Those are the expensive games, the jets, the vacations, the homes in Maui, all of that stuff. You're funding that because you're not being financially responsible. So Understand that the U.S. Federal Reserve control all monetary and fiscal policy. They set interest rates. They can move us in and out of a recession based on economic activity that's going on in the present moment. So how are you contributing to that? Are you lining their pockets, or are you becoming a master of your money so that you can line your own pockets? Think about that, and I'll see you in the next video.